Sorry, right, Brian. Just getting all the fluff off my jumper. Can't be
No
doing these
problem.
videos not looking professional. How you doing, mate?
Yeah, I'm doing all right, Woody.
Good, good. Today's Fat Tail Daily was really, really interesting. Now, I tend to err on the side of free market, and I love. I had many rabbit holes in Hayek and Milton Friedman and all that, and obviously they're big proponents, and Thomas Sowell as well, big proponents of free trade and how that benefits everyone generally. And obviously the big news with Trump, his major economic policy is America first, and part of that is to put tariffs up to attract businesses and manufacturing back to the US. Um, I've always thought, I've always had a good or bad a perception that tariffs are negative generally. But you tell me, you present another side to the story today. Do you want to kick things off?
Yeah, Woody. Before I do this, I do want to clarify that I am largely also a free market thinker. In the last 3 or 4 years, I've moved from being conservative to becoming even more libertarian, and there's a difference between a conservative and a libertarian. Is that a conservative? The views are they would like to maintain the tradition of things. How in the case of Western values, it's maintaining the the Greco-Roman and the Judeo-Christian type of society, and the views of having certain customs and also ways of life. Now, a libertarian is one where it goes even beyond that in the sense that we are looking towards liberty but not licentiousness. So liberty is the freedom to do what you like, but you also consider the impact it has on others. So it thrives on the golden rule: do to others as you like do to you, and the silver rule: don't do to others as you don't want others to do to you. So I moved to that, especially because of what's happening with regulations, with government's top-down type of control, for what they call they're doing it for the good of everyone, the greater good. But in today's discussion, I'm going to talk about how tariffs, which normally in economic theory would state that it would lead to a greater loss of total productivity, and therefore in economic theory it's not a good thing. But in the current environment that we're in, I believe that the Trump administration, should they impose tariffs on foreign imports, not just on China, but especially in China, and I will talk a bit about that, it would lead to a net benefit, not just for Americans, but also for global trade. And I believe other countries are going to watch the US as an example, and therefore they might implement this for themselves. And while the countries that are currently net exporters in Asia, in South Asia, in Latin America, Africa, etc., should they impose would they impose tariffs back onto the Western countries and lead to a net loss? I believe that the benefits will far outweigh the cost, and there's a reason for it.
Well, let's dig into those reasons because you present an interesting counter argument to conventional economic theory on the subject of tariffs. So, how do you see Trump's policy potentially reshaping the global supply chains and manufacturing, for example?
Okay, so going back to his first term, he was talking about how with iPhones, for example, he was going to impose tariffs on iPhones import from China, and then you had mainstream media melting down and trying to scaremonger everyone into saying if President Trump imposes a 20% tariff on iPhones, you're going to pay 20% more on your iPhones. Now, had this been a 25-year-old fresh graduate, we can forgive them, right? But for mainstream media financial pundits to push this outright lie to say that a 20% tariff on iPhones mean that Americans are going to pay 20% more, they either think that the viewers are stupid, or they're actually being malicious, because the way tariffs work is you charge 20% on the manufacturer going out of their shores. If it costs them, say, $500 to manufacture the iPhone and you charge a 20% tariff, it means that the manufacturer has to pay an extra $100 of duty. Now, when the iPhones arrive into America and they're selling it for, say, $1,200, sure, the $100 duty that the government implemented, the distributor may pass that entire tariff through, and it will be a $1,200, $1,300 phone. So what's the increase of that? 8%. Now, I'm oversimplifying things, because you've got to include freight, you've got to include other duties, you've got to include the profit margins that the middlemen actually would charge in the middle. But in this very simplified case, we can see a 20% tariff will not necessarily lead to a 20% increase in what the Americans pay. Now, same thing with other countries when they impose tariffs on the exporter. You are doing exactly the same thing. You're charging what they actually sell at the customs on their end onto your product, but then inside your domestic country, once you've imported it in, since the prices are higher, the net increase isn't as much. So my argument is, if Western nations charge the tariff on cheaper exports, or cheaper imports, I would say, then the government would have additional revenue from the tariffs. Now, depending on how the government then uses that tariff, and in the case of what President Trump did back in his first term, was he actually subsidized the farmers in America who have been on the short end of the stick with global trade. The net benefit is that you have the countries that have moved overseas for cheaper production. They have to pay a little bit for what they've done, for the cost of causing the economy that they used to work with, that they operate from. There's a net loss in that economy, and the government's actually redistributing it. This is one of the few examples where redistribution may be beneficial, but you can't actually apply that across everything and also across all industries, or that every nation should do the same. It works only because the Western countries are more affluent, the labor costs are higher, they've enjoyed higher living standards, and the country and these companies that used to work in these, operate in these Western nations, have decided to offshore since the subprime crisis in 2007 to 2009. And also way before that, I think when the free trade agreements under the Clinton administration, and even before that, caused massive offshoring slowly towards Asia, Latin America, and even slowly may even move to Africa one day. So it's really kind of rebalancing the scales after years and years of unfairness.
Yeah, you talk about how the current system and current financial system with central banks currency debasement has contributed to that offshoring. So can you just explain in layman's terms how tariffs might help address those systematic issues or problems?
Yeah, so it's almost like we're doing this interview backwards, from the practical back to the theoretical, which I think is easier for people to digest. Now, Back in 1913, the Federal Reserve Act was passed through through Congress in the dying days of 1913, and from there they created a private Western central bank called the Federal Reserve, which became the lender to the U.S. Treasury, and from there, America became a country that would be indebted not to its people, but it would be indebted to a private corporation that also had the power to use its capital and the fractional reserve lending system, where they could create more currency for the same dollar that is in their capital. You can multiply the monetary supply. So Western countries gradually followed down the path that the U.S. went down, and they became borrowers. They became creditors to central banks, and as their living standards improved because the Western nations had better technology, they won the war. They had they didn't have to spend so much restoring their homeland, apart from a couple of countries that fought in the against the Allies in both World War One, World War Two. So their capital increased, but at the same time, because there were market booms and busts occurring, such as you had the Roaring Twenties, the Great Depression, you then had the post-war restoration, Korean War, Vietnam War, the oil crisis, you name it. All those market crises led to the government having to bail out companies and households when things didn't go well. Where did they get that bailout money from? From the central banks. So the central banks kept creating new currency, which was faster than the growth of goods and services and productivity, and that's why you have inflation. Now, as price levels rise, companies look for places where labor cost is cheap, where production costs are cheap, so they generate higher profits. They move out of the Western countries, firstly to Japan, then to Taiwan, then to China, India, South Asian countries, Southeast Asia, Mexico, Latin America. And all that led to businesses generating more profits, moving offshore, and then the Western nations import their goods, and the Western nations are the ones who become net. So they become net consumers rather than net producers. And when you have a net consuming nation, their inflation rises faster. Their living standards may increase until the monetary supply overwhelms the economy through interest payments, taxation, and welfare payments. Now, what President Trump wants to do is to put an end to that vicious cycle and equalize the playing field by imposing tariffs on these countries, effectively saying to the countries that have the companies that moved out of Western nations to manufacture cheaper, you pay your fair share, and we're going to use that to build back the Western nations' economy and its people, and through the redistribution.
So how does that create a win-win situation then, in your view? Because doesn't by shifting power back to the US in that sense, is that a negative for the other side of the bargain?
Yeah, so that's a good point. Now, should America be successful with bringing back manufacturing and therefore improving the U.S. economy and reducing inflation, truly reducing inflation rather than artificially reducing inflation, such as what the Biden administration did in selling the strategic petroleum reserves to keep the oil prices down, and also to impose these price controls on various industries, etc. You can fix inflation by increasing productivity. Now, America has been and will always be a powerhouse for innovation. And when you have manufacturing returning back to America, then you're going to get better quality goods. You're going to improve the competitive sphere in global trade, and Western nations are going to look to America and go, I want to do the same. Now, the nations, the Asian countries and the African and the Latin American countries, they won't necessarily be disadvantaged because of that. Because at the moment, if you look at what's happened to China is, whilst living standards have improved because of industrialization, we have seen property prices go out of control. We've seen imbalances inside the country with the wealth disparity. And the Chinese government, as much as they are saying that they will retaliate because of retaliate tariffs with other things, I believe the Chinese Communist Party knows deep inside this gentrification of China is not only creating more social instability, they actually need to kind of find a way to let this froth out of the system. I believe India, Southeast Asian countries are also probably experiencing the same. And when countries start onshoring, bringing back manufacturing within their own countries and trading within their regional blocks, rather than one country or one region as a powerhouse to everyone, you create a less fragile supply chain. So you won't see the problems of what we saw with the lockdowns and the border closures and the Russia-Ukraine war. The last 3 years have been disastrous. We might actually see an improvement in overall trade should countries actually, should the tariffs work in the US and then all the other countries start moving towards a more multipolar trade convention.
So, final question, Brian.
Yeah.
Are there any indicators that investors specifically should watch for to gauge whether this new approach to tariffs is working or not working?
Yeah, good. That's a good question. My guess is, without trying, it's not easy. But if we look at higher GDP for America and also any countries that impose tariffs against China and also the net exporting nations, if you see higher real wages with real wage growth, and the countries that the tariffs have been imposed upon, their economies don't collapse, then we're actually seeing the tariffs have actually worked, and there could be more of that. And you would also see that nations that also bring back manufacturing onshore are going to improve their productivity, real wages for their people, and lower inflation. All that, it looks very idealistic right now, but sometimes we might actually wish upon a miracle and it could be fulfilled.
All right. Well, thank you, Brian. We'll leave it there. For those watching, please do check out Brian's thoughtful piece in today's Fat Tail Daily. The link's below. Let us know what you think. Thank you.
Thanks very much, and God bless.
Thanks for tuning in to Fat Tail Daily. If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.